Let's start off by asking about your members and their views, their sense in terms of sentiment, and if they're making any changes at all in light of what we've seen in terms of this deterioration, it seems, in negotiations between the US and Chinese side and this threat of additional tariffs or ramping up this tariffs as early as Friday.
Well, I think there's a couple of things that are really sort of solidified in our position paper. First is on the principle side, we advocate a constructive process of opening up the markets. You know, we don't advocate this tit-for-tat protectionist race to the bottom that we're seeing, because we really do believe this disrupts the wider trading environment. And it's not just the US and China who are being implicated, it's also British companies, for example, who are getting caught in the crossfire. If you're manufacturing in China but you're exporting to the US, for example, you're really going to be impacted by this hike in the tariffs. Interestingly, we did a survey back in December, and we put the question to our members, if the tariffs on the 250 billion increase from 10 to 25%, what will this mean? And in the goods side, the manufacturing side, 13.5% said they would consider moving production facilities out of China. So yeah, this does have a big negative impact on
so again, those supply chains could be impacted. This could change the calculus for some who have been hoping for some resolution in terms of the trade talks. Of course, a number of issues you share in terms of British businesses with US businesses and what we're hearing from the Trump administration in terms of intellectual property and regulatory environment. So just run us through what the key concerns are and what progress you think has been made from the Chinese.
Well, I think the first thing to say is that we do acknowledge some of the progress that's been made. You know, we're not just here saying that it's all terrible and no progress has been made. Some progress has been made. We've seen, obviously, the foreign investment law, which in principle UK business supports. It's looking to create a level playing field, but we just need a lot more detail around that. That's the first thing to say. We also accept that there's been progress made around intellectual property rights, but again, that's still the second most important concern for our members. They're saying all these bad faith trademarks which are being registered here, that's causing a lot of trouble for UK businesses. So IP is a big issue. Licensing, even if the industry is not on the negative list, sometimes getting these licenses is so difficult, and they make it almost like a chicken and egg scenario. You need track record in China before you can get a license, but if you can't have a track record unless you've got a license. So there's a lot of non-tariff barriers which are causing issues. Another issue is around cybersecurity. The 2017 cybersecurity law, again, it's still vague. There's all these grey areas. And compliance, companies want to comply, but the fact of data localization, difficulties in moving data in and out of China, this is making things very difficult for UK business, but also the wider international business community.
But Nick, I'm just wondering, if we see this escalation of tensions between the US and China, does this actually force China to work with other alternative trade partners like the UK? Could this in some way actually bode well for UK businesses?
I think our headline response there is that actually, we don't think that this tit-for-tat protectionist rhetoric is good in general for UK business. Now, that's not to say, however, that there are some UK businesses which could benefit. Certainly if the Chinese are being encouraged not to work with the Americans, and perhaps they could favour some of the UK service providers or UK businesses. So there could be a slight potential for the UK to do well out of it at the margins. But I think in general we really don't think this is particularly good for the wider trading environment, and we're seeing this obviously in stock markets all across Asia Pacific, that this does have a wider ramifications than just on US and China.
Yeah, Nick, hold that thought. Kim Do's here with us, of course, in our studio. Your comments.
Yes, Mr. Bridgham, can I please ask you, you mentioned before that UK companies may look to outsource or move production facilities elsewhere should the tariff increase to a level which doesn't make the companies competitive anymore. Can you share with us which particular countries you think that will be benefiting from this? Thank you.
Well, in terms of the low-cost manufacturing, I think a lot of that would be looking towards sort of Southeast Asia, so places like Vietnam, Malaysia, Thailand potentially. Potentially Southern Asia. I mean, I know India's having a big push in growing its sort of manufacturing base and encouraging foreign investment to come in there. I think one thing to add is that this isn't just as a response to tariff the tariff increases. There is a general feeling, especially low-cost manufacturing, it is moving towards some of these markets. But this jump to 25%, I think, is going to quicken up many decision-making processes in some of these UK and international businesses.
Nick, it's not the first time we've heard concerns over the future implementation, the enforcement of this foreign investment law. But the thing is, how do you codify enforcement and implementation in an actual law? We just have to wait for it and see what happens?
Yes, we do have to wait for it. I mean, in our position paper, it was our number one overarching recommendation in the executive summary. It was all about the foreign investment law. We need more clarity because at the moment it's so grey. The National Security Review, for example, we just don't know what that means. How is that going to be implemented? This law is coming in 2020. But the way it's structured at the moment, there's just still so many questions and still so many unknowns. So while we support the principle of the level playing field, at the moment we're still concerned about what this will actually mean.
Nick, how much upside is there potentially for Britain's banking industry and insurance industry, given some of the regulatory changes we've had there, some of the opening up moves?
I think the banking and financial industry is obviously one of the UK's unique selling points. You know, the UK is 80% services. The City of London obviously has a huge international advantage. We've seen, an increase in the equity caps from 49 to 51. What we are hearing, though, is that at 51%, there's not many Chinese who necessarily want to come in as a minority shareholder at 49%. So it's not a game changer to 51%, but the general direction to the opening up of the banking and financial sectors are very positive. Again, there's just challenges really about ultimately the issue is the fact that the liberalisation of the capital account, the liberalisation of renminbi, until that truly happens, I don't think we're going to see a real huge growth in the financial and banking service industries.
Yeah, and Nick, you've said before that a lot of UK businesses are more worried about tariffs than Brexit itself, but I guess we got to talk about what's going on with Brexit at the moment. Are you still confident that the UK and China can reach some type of trade deal after Brexit?
Well, if there's a lot of conditional language there. I mean, obviously, we still just haven't got a clue what's going to go on with Brexit. But if we do find ourselves outside of customs union and with the ability to forge new trade relations with other markets around the world, well, I think China's going to be up on that list for the UK to be targeting. It's the second largest trading partner outside of the European Union after the US, but it's potentially the one market with the biggest upside. We've seen obviously the New Zealand's and Australia forge free trade deals with China, and the real benefits that's had for bilateral trade. And these things don't happen overnight, but a free trade deal with China, yes, that really would be something.